Well, welcome everybody. I've been with the chamber since 2016 is when I joined, but I've been out of the game here for a couple of years. So it's nice to see some familiar faces in the room, some new faces as well. So thanks for coming and attending. I hope we get a little bit out of this today. I hope we don't put you to sleep. I know it's Tuesday after 4 o'clock, and so at this point, a little finance and accounting doesn't really get your blood flowing, I guess. So we're going to talk about kind of the background in financials, kind of building a base, kind of the record keeping, how I got into this whole thing, and then kind of get into some QuickBooks specific information. So QuickBooks, I know you see kind of the difference between QuickBooks Desktop and QuickBooks Online, and the different versions, the different software that's available to kind of help track financial information. So we can dig into that a little bit. If anyone has any questions throughout the presentation, please raise your hand, interrupt me at any time. We can dig into and kind of, steer that direction. So again, that kind of approach we want to say, let's dig into QuickBooks, right? Let's just kind of do an overview of the program, see what's available, see what we can do with it. I know we've got a bunch of small business owners in the room, a bunch of bankers in the room as well, CPA, Bruce over here. So I think the information that we can present will help not only maybe you as a business owner, but maybe potentially some of the clients that you interact with, right? I've heard the horror story over and over again with bankers receiving a P&L on a legal pad, right? I mean, everyone's probably seen that. I see a head shaking. You've probably seen that a number of times. And so our goal at our company is just to really kind of get the financial information that business owns, right? It's all their financial information into one place in an organized fashion so they can present financials, make decisions off of those financials, and hopefully grow their business at the end. Jeff has kind of talked about my degree in economics and finance. Not an accounting guy by trade. I was a finance guy. My first job out of college was at TradeBot Systems. It was a high-frequency trading firm up north of the river, so it was equity trading kind of on steroids. We did 5 to 10% of the U.S. and Canadian daily volume in trading when I was there. I was there for 7 years right out of school. So kind of a big powerhouse trading firm, all proprietary too. We weren't buying or selling for clients. It was all this kind of, like I said, algorithmic trading, trade as much as you can throughout the day. From that
all
company,
money came from the guy that you
all money came
from the company,
yeah,
right?
on the company, exactly. Yeah, backed by one guy. Exactly.
Wow.
So the mentality there was, at each data point, each trade, even though we did it millions and millions of times a day, was a data point, right? There was a price, there was a time, there was a symbol, and so we collected massive amounts of data at that company. We all aggregated all that data. We had the ability to go back and query all that information and look at the past and see what information we could glean from that to make decisions in the future. And so it kind of got this idea that, well, if they're collecting all this data, we can look at all this data at any given time and make decisions off of it. Why can't we apply that to small business owners, right? So my first client that I moonlit for was a Papa Murphy's franchise owner. So had 4 franchise locations, had to separate each location based on, and then report up to the parent company. And so I kind of got that mentality, okay, wait a second, if we can take that big data set and we can shrink it into a small business data set, but then continue to aggregate that information and report on it, right? That's essentially what bookkeeping and accounting is doing, essentially what the program was doing. So I taught myself QuickBooks Desktop at that time, built a set of books, did the financial reporting for each of the locations to Papa Murphy's International. And that's kind of where I got this whole idea of, again, small business, bookkeeping, which turned into fractional CFO work. Over that time since then, we've worked with a variety of clients in a variety of industries, from small, I would say, 150,000 in revenue up to 8 million in revenue. Home renovation, home flipping, rental properties, e-commerce, like I said, the franchise restaurant stores. Quite a few web development companies, but really kind of some of the bigger ones we've got are in the home renovation and rental property industries. Lastly, again, I'm passionate about what I do. I really enjoy this stuff. I know a lot of people just kind of their eyes roll back of their head and, oh my gosh. But I do. I really enjoy it. I enjoy the aggregation of the data. I enjoy working with clients on a regular basis and getting into the weeds and some of this stuff. Full disclosure, legal disclosure, I am not a CPA, right? So
Bruce's job.
Just Bruce's job, right? So our job is to aggregate that information throughout the calendar year, work with our owners, get glean information that we can. We pay a lot of bills, we create a lot of invoices, we transfer a lot of money back and forth, right? It's just really kind of our job to keep the money flowing within a company, keep it well organized. Then at the end of the year, what we do is to take that clean set of books, pass it off to the CPA so that they can then do their work on a tax return. I mean, I'm sure Bruce has heard, the horror story of coming in with a shoebox full of receipts, right? We're trying to avoid that at all costs, right? Because at the end of the year, when they've got a clean set of books, it makes some year-end adjustments, right? They can use that information to fill out a tax return, and hopefully that process is pretty simple and not as stressful as it can be. So when we get into this, the financial document and the topics we're going to talk about is, to start with, banking and financial organization. So at the root of this, we're just looking at transactions, right? We're organizing transactions that happen in the bank or the credit card for all of our clients, right? And at the bank level, there's checking and savings accounts, right? There's loan accounts, line of credit accounts. And so it's just trying to organize all that information into one place. The record keeping is what we kind of talked about there with regards to the data points, right? The record keeping is the individual transactions and making sure that you're coding them correctly, aggregating that information to then look over a period of time to glean some type of information from it. Let's talk about standardization of accounts. Again, your chart of accounts is really important from the beginning. When you set up your chart of accounts, you want to make sure that it makes sense not only to you and your industry, but also to others are going to view that information, right? When you're going to go to your CPA, they're going to have a slightly different, on their tax return, right, accounts that they're going to use to put together your tax return. A banker, though, is going to want to see something slightly different, maybe a little bit more detailed with regards to expense accounts or child accounts within those expense accounts to show where you're spending your money. Same with the balance sheet, right? They want to show how many loans you have, what the loan balances are, what your interest payments are. And we'll talk a little bit about detailed reporting, again, getting into profit and loss, balance sheet, statement of cash flows. Talk a little bit about cash flow management, and then budgeting, forecasting, and pro forma work at the end. Any questions so far? That's what we're talking about. Okay, so financial organization. You have to build the solid foundation, right, to get to where you're going. That old rule of junk in, junk out is absolutely true here. If you're willy-nilly coding stuff that comes through, like, oh, we're just going to put that under office supplies, right? And that doesn't really tell you what you're spending on maybe software, right? Software is essentially an office supply, but you don't want to bundle it just in office supplies. It goes with pens and paper and everything else. So making sure that you're accurately coding those transactions on a regular basis, right, will give you that foundation so that when you look back over that period of time, over that 6, 12, 18-month period of time, you know that you're looking at accurate and up-to-date information. So kind of one of the first, recommendations when people are getting started with new businesses, separate business and personal, right? I mean, pretty straightforward. We see a lot of clients, though, continue to commingle, right? And so in that case, what you're doing is you're trying to decipher, well, was this expense at this certain location, business or personal, right? And so if you're running a bunch of personal items through your company, okay, sure, they can be fine from maybe a personal cash flow perspective, but when you go to the bank and they say, well, geez, you're losing money year after year, and why are some of these expense accounts so large? Well, there's some fluff in there. And it's like, well, it's really not what you want to be reporting, right? You want to be reporting accurate information. Checking, savings, and credit card account. I explain to clients that having more than one checking account, having more than one savings account is okay, right? Having a rainy day fund or a tax savings account, setting some money aside to plan for the future. At the same time, though, I've got clients who have Profit First, for instance, right? How many people read Profit First? Anybody? Profit First. So, right, the idea there was to say, pay yourself your profit first, right? Get out the revenue that's in there, separate those funds into a separate account, into a tax savings, into your profit account, into your payroll account. And so the mentality is great, but at the same time, it's, some people get carried away a little bit. They've got 12 different checking or savings accounts that they're always shifting money back and forth through, and so it's a little hard to track. So I guess my recommendation is, somewhere in the middle, right? Credit accounts, credit card accounts. Some people are afraid of credit cards, and that's okay. I think they probably want to limit their spending habits per se. At the same time, though, I've got a lot of clients who are taking well advantage of the credit card accounts with regards to cashback rebates or frequent flyer miles. So I always kind of recommend it's good to have a business credit card that you're running things through, and then you get into the employee cards, right? So then you've got a parent card with employee cards, and again, some of those accounts are beneficial to a business with regard to rebates or tracking expenses on an employee basis, right? If you've got guys that are out in the field, for instance, they've got fuel cards, wanting to know who's spending what at what location. Again, it just kind of creates that digital history to look back and see where those expenses are lying. Savings, like I said, tax or rainy day funds. How do we aggregate all these accounts though, right? So you've got, say you've got 4 different bank accounts, you've got 2 different credit cards, one of those credit cards has employee credit cards underneath it, so you got 6 employees. So how do we aggregate all this information, right? Because at the end of the day, you're just, the more accounts typically, the more transactions. How are we going to put it all together? So these are some of the kind of the bigger accounting software today. I am 100% QuickBooks Online at this point. I had a couple clients using Xero early on, so dabbled with Xero a little bit, and it was fine. I think their biggest shtick was that it had an open API, and so there were a lot of third-party programs that they could write to, and so you could integrate very easily. I will say, QuickBooks has dumped a tremendous amount of money into the online version. I think they really feel like that's where it's going. Not to say QuickBooks Desktop it's not sufficient and is certainly viable for a lot of companies. I just think that at this point, QuickBooks Online can really do, I would say 95% of what QuickBooks Desktop does, unless you're getting into an enterprise version or something very large. Some of the other ones are, they're okay, right? I would typically stay away from it. I think the bigger appeal in some of, FreshBooks and Wave, for instance, that they're relatively cheap. I will say the one big downside that I've seen with Intuit and their QuickBooks Online version is, the pricing year after year, it goes up just a little bit more. And at the same time, they're offering better features, right? So it's justifiable to a certain extent, but once you're kind of in that software realm, right, it is a monthly subscription fee. But at the same time, cost of business, monthly subscription fee. QuickBooks Desktop, for instance, though, you've got to get a new version. How often do you upgrade? Every 3 years? And so you're good for 3 years?
But they've changed that now, and it's going to subscription-based also. So that all changed within the last 30 days, so, yeah. It's done it that way except for the accountant version or the pro advisor version of it.
Got it, okay. So they're gonna hook you one way or another?
Yep.
What you're saying, yeah, exactly.
They're gonna get you one way or another.
Exactly. At the end of the day, though, clients come to me, it's like, well, I don't have anything in place, right? They are just running out of their checking account. And they say, well, my checking account's positive, right? I'm making money. Not really. Clients have come to us and they've been doing, running a small business for a year or so. They were doing everything in Excel. It's like, okay, well, it's sufficient to a certain extent because at least if you're up to date and keeping it accurate, right, it'll give you an accurate picture, but gosh, that's time consuming. So, I would say if you're looking at some type of software, just pick something and run with it if you'd like, right? It's better than nothing. It's better than just basing it on your QuickBooks, your bank account balance, and it's better than running it in Excel. So the other thing we talked about earlier with, Xero, right, was that the third-party application integration, right? And so, listen, QuickBooks Online is not going to be your end-all program for a lot of companies, right? They're going to have credit card processing companies. They're going to have trade-specific CRMs, right? TradeGecko or Printavo. Printavo was primarily for print shops. Screen print shops or t-shirt screen print. And so I feel like every industry nowadays probably has their own unique third-party application to help them manage, primarily as a CRM, really. Manage the customers, manage their orders, manage their inventory. Things that QuickBooks does okay, but not extremely well, especially if it's industry specific, right? There's always a little bit of nuances here and there. Lawn care is another big one. There's several different lawn care, bookkeeping or CRM programs that will help you organize customer information. At the end of the day, though, a lot of clients that we have will run some type of duplicate software, right? They'll manage their customer base here, but then that financial information picks up and carries over to their QuickBooks Online account from a financial perspective. And so maybe all the customer information that lives in their CRM doesn't live in QuickBooks, but you're at least capturing the financial revenue that's coming in, and then capturing all of the expenses and everything else that flows through the business. So some of these other third-party applications will offer some type of bookkeeping service underneath them. Again, they're okay, they're fine. At the end of the day, what I kind of look at is the end of the year, again, when you're working with your CPA, are you able to pull the appropriate reporting down? Are you able to give the CPA access? A lot of times what we do is give our CPA or the CPA of our client access to the QuickBooks Online account, right? So they can get directly into the program, make some adjustments, pull the appropriate reports, and then they kind of close out the books. So we do some of that at the end of the year. Same time though, we've got some CPAs that say, send me a P&L or balance sheet and I'll do my tax return. Okay, that's fine, but I kind of like letting them get in there, right? Letting them see what we've done throughout the year so they can question anything, they can go into the rabbit hole and see where we came up with that information. So that's really kind of what I like. Okay, so what I'm talking about, pick a bookkeeping platform, right? The best thing you can do is just pick one and run with it. Figure out if it's something that you want to do, if it's an admin, if it's somebody you want to hire to help manage it. I mean, the most important thing is just to make sure that you're using it regularly, not waiting till the end of the year to compile everything. Keep it up to date on a regular basis is my best piece of advice. Assess the additional software that are needed within your industry, see if there's some type of connection or some type of integration that works. If not, again, it's another program to manage. I'll say, bookkeeping software is not going to solve all of your problems, right? It's still another program that you will have to manage. It's not an easy button, but there are people out there that like to do it. Otherwise, people can do it themselves. But when you're thinking about that, what are your sources of revenue? We're talking about those third-party applications, like some of the credit card processing, Square or Shopify, right? Stripe, PayPal is another kind of one. How are you generating the revenue? Are people sending you checks in the mail that you're going to cash or cash on your phone, right? Are they paying you directly through those credit card processing companies? QuickBooks also has a merchant account as well, directly integrated, so I can send invoices to all my clients. They can pay them directly through the email, right? Click on the email, pay the invoice, boom, it's done. QuickBooks on the back end accounts for all the processing fees associated with that, whether it's a credit card or an ACH payment, and then kind of close out that invoice and match it. And so there is the internal process within QuickBooks Online that makes a lot of those items really easy, right? Because they say, hey, somebody paid, it'll automatically close it out, and it knows exactly what to do, as opposed to recognizing that revenue in a Stripe account, then you're seeing the revenue coming in, but the revenue is coming in from, say, a credit card processing company is usually net of their fees. And so when you're recognizing that revenue, are you recognizing gross revenue and then accounting for your credit card processing fees or the cost of goods sold? Or are you just recognizing the revenue as the net that's coming in, right? And so with that source of revenue, make sure you're fully accounting for the real revenue you're generating, as well as the fees associated with generating some of that revenue. Same thing with vendors. How are you paying your vendors? Bill.com, you may have a Bill.com account that you used to pay any vendors. So Bill.com, again, a third-party application. Nowadays, QuickBooks did an integration, a direct integration with Bill.com and another, I can't remember the other vendor. So it's, again, kind of an integration fully within QuickBooks Online. And so QuickBooks Online, really, you can, from invoicing a customer to receiving a payment and then paying your vendors, can all be done within that umbrella. And so you can create a bill for a vendor within QuickBooks Online. You can process that payment through QuickBooks Online. They use a third-party processing company to send out a check or an ACH payment directly to that vendor. But again, you don't have to leave the QuickBooks Online universe to issue a payment to a vendor. You don't have to leave the QuickBooks Online universe to receive a payment from a customer. And so it really has become more and more fully functioning as a program, as a standalone program. 1099 tracking as well, that's another big one. So we're paying your vendors, right? How are you tracking the payments that have gone to them throughout the calendar year so that you can potentially issue a 1099 at the end of the year, all of your contract employees? I don't think I really touched on this either, but payroll, right? QuickBooks Online has integrated payroll as well for small. I would say, it's good for small organizations that don't have a lot of benefits or 401k. If you're running straight payroll for a handful of employees, and it's very easy to use. And again, the integration is something that I find very beneficial because you don't have to depend on a third-party application. You don't have to import data or make any adjustments. It's all kind of done internally. So QuickBooks Online payroll, or issue W-2 wages, direct deposit to your employees. It'll track all of the W-2 wages that paid throughout the year. It'll then issue W-2s to federal and employees at the end of the year. It will file state, federal unemployment and withholding taxes and forms. And it's pretty slick at this point. So 1099, sorry, got off the top of there. 1099. So if you're tracking your vendor payments to a specific vendor, you can then calculate the 1099 amount to be issued, and QuickBooks Online will then process and issue a 1099 to the federal government at the end of the year. So like we talked about earlier, every transaction provides multiple data points, right? You've got a date, you've got a vendor, you've got an amount, you've got, how are you paying for it, right? The account that you're using to pay for it. And so if you take all those data points and you aggregate throughout the entire year, right, that creates your database. And your database essentially is your QuickBooks Online account. It is your bookkeeping software. And that database can be accessed at any time, because again, it's your information, to then glean information and make decisions off of. Okay, standardization of accounts. So this kind of we get into the chart of accounts, right? It seems kind of silly to say, but at the beginning when you're setting up a new account, right, you want to make sure that you've got expense and income accounts that make sense to you, right? Industries are going to be slightly different, they're going to vary, and so, but at the same time, there's going to be a lot of standardization of accounts that happen, across multiple times, across industries. I would say, keep it simple and concise, right? We don't want to create an expense account for every single different transaction you have, right? Pool transactions together, make it simple to understand what's in those transaction pools. Keep it consistent though as well, right? If you're paying insurance and benefits, right, keep an insurance account. The software and applications is another one, right? Keep it consistent so that you know exactly what's in those expense accounts at any given time. Update and review regularly. I mean, it's okay to make changes. It's okay to say, well, I've got this expense account, and it's, month over month, it's a pretty large bucket. I want to break some of that stuff out, right? Break it out. I mean, if I think general rule of thumb, I say, if you're spending, more than $2,000 or $5,000 a year or quarter on a certain vendor, right, on a certain expense, you should really maybe think about breaking that out a little bit, right? If you've got an office supply that you're constantly paying for that's a very large ticket item, and it kind of gets buried, break it out. Again, you don't want to get too aggressive with it and have 150 different expense accounts, but at the same time, make sure that it works for you so when you pull up a P&L, that you understand what's in those accounts. I also like the use of, parent and child accounts, right? Office and general administrative expenses. And then underneath that office and general administrative expenses, like I said, we've got office supplies and software and fuel, maybe, rent, things like that, so that you could then see the breakdown of, but then you could say, okay, what are my total operational expenses, right? Same with cost of goods sold, the direct costs of the products that you're selling. Again, create a cost of goods sold parent account, and then maybe you've got materials, you've got direct or cost of goods sold labor, you've got freight and shipping. Again, you're breaking them down into some smaller accounts, but they're also rolling up into a parent account, so you can see the total of cost of goods sold, the total of insurance expenses, etc. And that's what I really kind of like to do. As what I said earlier, don't bring your shoebox full of receipts to your accountant. He's not going to be happy with you. I think at this time I was going to switch over to kind of a sample account within QuickBooks Online, just kind of poke through here. Some people have seen QuickBooks Online. Have you seen it? You guys people familiar with it? Okay, perfect. So this is a development company. It has some rental properties, and so within here, this is kind of poke around through here to kind of show you kind of a brief overview. So the dashboard is kind of show you where everything lives, right? Your workspace, money in, money out, accounting and reports. It's kind of a landing page, right? To kind of see what's going on. Within this dashboard, it'll kind of give you an overview and give you a couple maybe notifications and things like that to say, oh, things to go check out, things to go that need help or maybe to be fixed. When we get into banking then, the great thing about what I like QuickBooks Online, and maybe QuickBooks Desktop does it at this point, is it pulls in transactions directly from the bank, right? And so the transactions that hit that bank account are updated on a daily basis. Same with a credit card, right? And within the bank, they're pulling in some transactional information. And so it'll tell you a vendor, primarily, right? Just some type of little description. If you look at your bank statement, right? It shows you some type of small description within there. And so this kind of helps you more easily identify what those transactions are. And from within the banking page here, you can create rules. And so they're kind of short-coded rules. They can say, okay, if I see bank text with KCP&L, right, I'm going to set this up as utilities. I'm going to say the payee as KCP&L, and it'll kind of either automatically book that transaction, or it'll give you just a recommendation to say, hey, before you book it, verify this is what it is, and then you can book that transaction. So a lot of this stuff can now be somewhat automated, right? You're not sitting there manually data entering the date and the amount and fat fingering stuff, and so it helps the process become more accurate. That's really kind of what I like about the banking feature. There's a receipts feature as well. It's somewhat new, and so not only kind of you as the accountant, but your admin or your employees could upload receipts so that you can tag those receipts and attach those receipts to certain transactions as well. And so maybe somebody goes, the office store, they take a picture of the receipt, they upload it, and then the transaction comes in a couple days later. Then they can then match that transaction to the receipt that they've uploaded. And so I think I've heard different varying opinions on, do I keep my receipts? Do I attach them to everything? I think standard practice should be to set them aside, put them in that shoebox, don't show them to anybody, but at least have them on hand, right? Hold on to them. In this case, now you can digitize everything and put it up there, and then you don't necessarily hold on to the paper. I've also heard, like varying arguments that a bank statement or a credit card statement will provide a majority of the information that a receipt does, outside of going to a meal and saying who you're with or what the event was for. But a lot of that, again, a lot of that information on transaction basis is there in some form or fashion. So then within sales, right? So sales is kind of where your customer information lives. So within sales, you can see an overview. You can see, I primarily go to, in this case, this was tenants this was a rental example, right? To show what's going on within each of these locations. And then, so within here, you can look at the invoices and the amounts that are paid, etc. Again, tracking the tenant information. Those invoices are sent to each individual customer, and payments are made, they're closed out, etc. Another feature in here are products and services. And so you can now kind of dig down into, if you're selling a variety of products or services, and say you've got, say you have 25 different products or services you're selling, right? And you're invoicing your clients for all 25 of those. But at the same time, you don't want to have 25 different income accounts, right, on your P&L. And so you want to say, well, I'm just going to call it all sales, which is fine, right? Your revenue is just sales. But within each of those invoices you're sending and the products and services you're creating, you go back in, pull a report, and say, okay, I want to dig down, I want to dig deeper into those sales. I want to dig down into those 25 products that I've created. What's my quantity? What's my average price? What's my total sales price over a period of time? And so again, it just kind of slices that a little bit deeper to give you information on the back end, but it's not going to be in your P&L. It's not going to be right there, taking up a lot of space. So I do like the products and services feature quite a bit. Cash flow planner, I haven't played around that too much. Kind of cash flow tool to show what's coming in, what's going out. They've kind of made this a little bit more robust now. It'll look over the past 3 months. It'll give you a projected amount based on what your items are coming up. Cash flow is a tricky thing though. I mean, a lot of clients want to say, oh, what's my cash balance going to be, next month? Well, for some people, it's pretty standard, right? I mean, generally what's coming in, what's going out, but for a lot of people, it gets pretty lumpy, right? You've got unexpected expenses, you've got high revenue coming in one month from the other. So cash flow is always a predictor, and it's okay to predict cash flow, but it's a science, right? It's never going to be exact. Never going to be exact.
Like the weather?
Yes. In Missouri, like the weather in Missouri.
Yeah, oh man. Wow, that's vicious.
Okay, so then we get into expenses. Again, this is tracking all of your vendors, all the vendors that have been used and available. So again, when I say, keeping track of each of those transactions, this is kind of what I say as well, make sure you're categorizing them underneath the vendor name. That way you come in here, I can pull up any one of these vendors and say, okay, how much should I spend with that vendor under that time, right? The data is always there. A lot of people will say, oh, I'm just going to leave it blank. Or I'm going to go, call my name. It's like, well, yeah, but then you don't have the ability to look back and see what's happening with each of these individuals. Again, we talk about 1099s, right? If you're issuing a payment to a 1099 contract, you're setting up as a vendor, every transaction is tracked underneath that vendor. So at any given time, and then when you're issuing 1099s, you can see the total amounts paid to said vendor. Projects. Projects is a big feature that I've started using for a couple of clients recently. And projects are essentially QuickBooks Online's job cost version. And so there's a couple different ways that QuickBooks kind of allows you to track transactions, your revenue and expenses. You can class track, you can do location tracking, but the projects feature, which has come out over the last several months, has really kind of been, like I said, their solution to job costing. And so with a job costing, you can really look at a project. So think about flipping a house, right? That house is essentially the project. And so that address is that project. And so until you sell that house, there is no revenue per se, but maybe you can invoice and say, okay, well, I expect to sell the house for $250,000, right? But before you sell it, you've got to accumulate all the expenses, right? To purchase the house, you've got title fees, you've got insurance, you've got closing costs, you've got property taxes. Then as you're working through the renovation, right, you've got all your contractor payments for rehab, you've got carrying costs for interest and utilities. But then at the end of that project, if you're tagging all those expenses to the particular project, which is, again, not just your vendor, but to the project, then you can pull up the P&L for that project to see how it has performed. And so, you sell the house for $250, you put 100 or 200 in, right? Your net income for that project is going to be $50,000. But it gives you the ability, though, to track each individual project. And I really don't think there's a limit to the number that you can do. So one of our big big home renovation and flipper clients, we track every single house that goes through there. We'll do over 200 this year, individual projects. It's a lot to track, but again, the data's there, right? That information is extremely valuable to look back on and say, where was the location? Was it, what kind of asset was it? How much did we spend in roofing expenses that year, right, for that particular location? And so the information is extremely valuable to them because they can make decisions on where to go next, or where to cut costs, or how to drive up price, right? See the return on their investment. So I've really found the projects feature to be pretty nice, really. Like I talked about payroll, right? So payroll kind of get full integration here. Employee payroll can be paid directly out of here. Federal, state taxes are paid directly out of QuickBooks. Contractor payments as well, right? You got contractor payments that are in there. Time, T-sheets, time tracking. So within that job cost, you go back into projects, you can track time. And so you can track time for workers based on the projects or their location. And so, if somebody clocks in, they can do I think it's like geo-fencing, right? Geo-fencing based on where they are, they can allow them to clock in, and so it'll track the time of each of those employees, when they're in, when they're out. They can also potentially track that to a project. And so say you've got an employee that goes to one of these homes for half a day here, half a day there, they can clock in at that project, so you can then track the time cost, the payroll cost that's associated with that individual, not just as a contractor. That gets pretty far in the weeds, but it's been for some, it's been a beneficial tool. Reports. I won't dig into this too much in here, but the amount of reports that are within this program, again, pretty significant, right? And I agree it's somewhat standardized, but outside of the P&L, we always look at accounts receivable, aging summary, and the detail, right? What customers owe you money? How far past due are they? Same with payables, right? Looking at the accounts payable aging summary. How many dollars do you owe? What are your balances to each of those individual vendors? There's whole sections here with just within sales and customers, revenue to be generated, the expenses that are being generated, sales tax liability, employee contact stuff. What are your employees making based on their location potentially? And then the accountant tools, and that's where like I said earlier, what I really like about this is that you can give your CPA direct access to your book, so they can go in there and do some investigative work, right? So like I said, I'm not a CPA, there are a lot of year-end things that I simply don't know what to do with, right? And that's fine, but they'll go in here, look at trial balances, look at all the reports, so that they can then make those adjustments directly within a set of books to file tax returns. Taxes section of this kind of where, again, payroll taxes or sales tax centers lie. Mileage can be uploaded and tracked within here. Then within the accounting, this is that chart of accounts that we talked about earlier. Again, kind of looking at the bank accounts, looking at asset accounts, fixed assets, liability accounts, long-term liability, income accounts, cost of goods sold, and then the expense accounts within here, right? But again, the chart of accounts is going to be unique to each client. At the same time, there is some standardization to it that will allow you just to track all these items separately. Okay, so sorry, I know that's quick moving all over the place. Any questions? Any QuickBooks Online questions? Any QuickBooks questions? Okay. Yes.
It seemed like before I couldn't access cash flow unless you had a certain subscription. Is that changed?
It's very possible that it's still limited, yes. Because there's 3 different versions, or 4 really, I think. Essentials, well, there's like personal, then there's like essentials, then plus, and then advanced. And so depending on your subscription level, certain features are or are not enabled.
Okay.
So it is very possible that you were kind of cut off from that one. Yeah, that's the other thing they kind of give with you. It's like, you want to do a little bit more, your account gets a little bit bigger, and they're going to force you to upgrade. Again, they really kind of got you hooked at some point. Okay, so getting back to reporting, we kind of glanced over this within QuickBooks Online. But again, the inputs are your banking, the record keeping, the standardization of the accounts, right? All those inputs there are what's going to be able to allow you to look at accurate reporting on the back end. So the financial reporting on the back end is then what's being generated from the underlying data. The hard work is done now, but before you can make decisions in the future, right? It's got to be done now so that you can then use that information to your advantage. But once that stuff is done, it's done regularly, it's done accurately, the information that's coming out of that program is extremely beneficial. I feel like kind of look at the dashboard, right? Those reports to me are really the dashboard of your company's financial health. How's your company looking overall? Again, this is not something you look at maybe once, it's not just a one-time-a-year thing, right? This is a monthly thing, you're looking quarter over quarter, looking at past performance, you're looking at improvements, right? Looking at things, how do I change? Is there certain things that I changed? Are there new products that I'm selling? Are there new expenses that I've taken on, right? And so looking at a P&L not just over the past 12 months, but over the past 12 months on a monthly basis. So you compare month over month, right? You can look at percentage changes, see things that are maybe out of whack, things that have grown substantially, things that have underperformed. Like that product and service list, you have 25 different products and services that you're selling. You're looking over the last 12 months on a monthly basis, right? Maybe you're selling more products now for a certain item than you were previously. It's all there. So okay, a little bit more detailed reporting. So again, profit and loss. We're talking about a period over time, right? You're looking over the last 12 months. How did we perform over that 12-month time period? The balance sheet is just a snapshot in time, right? It's as of a certain date. So as of September 30th, what were the balances on these certain accounts? Aging AR and aging AP, accounts receivable and accounts payable. I think those reports are extremely valuable to a lot of our clients. They're looking to say, like I said, what customers owe their money? How far past due are those customers? How do I collect that revenue that I previously sold? Right? I kind of have an argument with some clients saying, the sales aren't done when you just sold something, right? So we've got to go out there and collect. Unfortunately, for a lot of people, going out there and collecting is a big part of their business. And so staying on top of who owes you money, right, is, again, a very important piece. Same with payables for vendors, right? Certain vendors will offer certain terms on some of the products that they're selling to you. Do you have 30 days? Do you have 40 days? Are they due on receipt? Are they net 2 or net 10, 30? What is that? How we go? 210 net 30, right? You get 2% off if you pay within 10 days or the full balance within 30 days, right? Some of those things are very important to track. And then we talk about statement of cash flow. Statement of cash flows gets really kind of encompassing because you're looking at not only the revenues being generated on a P&L, the expenses that are being incurred on a P&L, but you're looking also at the balance sheet items that are paying down loans, for instance, right? If you've got a loan booked for a company vehicle and you're paying towards that loan, the principal balance on that loan doesn't hit a P&L. It's not an expense. It'll reduce the loan balance on the balance sheet, but that loan balance on the balance sheet doesn't show up on the P&L, right? So how are you kind of trying to merge multiple reports into one? That's really kind of get into statement of cash flows. Every month when you're going out, you're paying on that loan balance, right? The interest portion, if you're separating it out each time the transaction hits, the interest portion is an expense, right? But the principal balance is going towards the loan balance. And so the statement of cash flow does a good job of looking at all the cash flow activity within the company to account for cash in, cash out, and then kind of an ending balance. Budgeting pro forma reports. QuickBooks, they do an okay job with regards to budgeting. It's still, in my opinion, a very manual process, but at the same time, I think setting up a budget and planning for a budget and that whole budgeting process is a manual process, right? There's really no easy button, in my opinion. I think what the good thing that QuickBooks will do, though, is it's say, you create a 12-month budget for 2022, right? Every month, you're going to look at the revenue you're going to generate for certain categories, the expenses you're going to incur for several categories on a monthly basis. And so you put together a nice budget in an Excel spreadsheet. Well, then now, right? I think the one beneficial tool with QuickBooks is that you can then take that information, upload it back into the program, and then when you run a P&L in January, February, March, etc., it'll show you what you have budgeted versus the actuals and give you some kind of comparison. What percentage are you over? What dollar value are over or under? How does it look favorability to what you budgeted for? So that's, I think, where the biggest advantage for the budgeting tool within QuickBooks Online helps. Pro forma reports, again, kind of an outside thing outside of QuickBooks, but how are you looking for particular sales? So you look at, we're talking about the home flipping, home renovation project, right? A pro forma would be prepared outside of QuickBooks Online to look at, okay, if I can buy the house for X, I can sell it for this, these are my expenses are this, right? What's my net income gonna be for that project? That's kind of what I think about more of a pro forma. Looking at something individual job costing for a project. Okay, so this was Crazy Dave's Landscaping Emporium. Again, looking at a P&L and a balance sheet. Just kind of glancing over it real quick, right? So the total income that's being generated, right? Within that income, right? Again, we talked about all the different product and service categories. So if it's a landscaping company, well, is it lawn mowing? Is it, gardening? Is it, big projects in the backyard? What is it? And so that's where, again, the income can be categorized as one single line item. But underneath that, you've got a variation of products and services. Same with cost of goods sold, right? Cost of goods sold, in this case, is just a single line item, but there should be subcategories underneath there. Then we get into our expense categories, kind of general operational expenses, right? Advertising, automobile expenses, rental expenses, job expenses that may not be directly related to the revenue that's being generated, utilities overhead, to give you total expenses, right? Your net operating income is then your gross profit minus your total expenses, and then other expenses, which would be things like interest expense, depreciation would be an other expense item, something that's not directly related to operations, but is an expense to the company. Again, looking at the balance sheet real quick, the bank balance and the bank accounts, right? Again, so we're looking at, we talked about earlier, the difference between the two, primarily, the profit and loss period over time. It's from January 1 to March 29th. The balance sheet is going to show you the balances as of March 29th. So balances your bank accounts, your accounts receivable, again, what your customers owe you. Other current assets could be, other savings accounts. Fixed assets are going to be equipment primarily, right? Vehicles and equipment. What are your fixed assets on your book? Again, not necessarily what you paid for them, but what their book value is. So that's total assets. Then you get into liabilities. Liabilities, accounts payable. Again, what you owe your vendors. Maybe you went and bought Bedrock and it's, you owe that vendor for the products that you purchase. Credit cards are a current liability. Then you get a long-term liability, again, notes payable. So you took a loan from a bank, that's a long-term liability. It's due in more than a year, more than 12 calendar months. It's considered a long-term liability. Equity then in the company gets you to total liabilities of equity, and all assets will always equal liabilities plus equity. Again, kind of looking at a sample AR, AP summary, right? Again, showing you your vendors and your customers, what you owe them, what they owe you, looking at the past due balances based on the invoices or bills that you're creating. Right? Whether it's due on receipt, whether there's terms available, to show you then what balances are due or past due to you. So this is kind of an easy indication to say, okay, well, I need to go after certain customers, right, that owe me money that are getting older, more and more past due. Again, just kind of a quick snapshot and give you an indication of who you can target. Okay, so a little bit more on statement of cash flows. It is directly generated out of your bookkeeping software. So again, that's not something you have to export to Excel and try and compile. A lot of the bookkeeping software, especially QuickBooks Online, will generate this for you pretty easily. Like we talked about before, all that data inputs significantly impact the information that's coming out of there. And so if it's not up to date, if it's not categorized appropriately, that information is not going to be accurate when you're generating a report. Again, without that accuracy, you cannot make educated decisions. The educated decisions will then allow you for future growth, right? So again, going back to the foundation, making sure you've got accurate information, making sure you're looking at the accurate information, making sure you're gleaming and making decisions from that accurate information. I'll tell you, cash flow management it's a juggling act for a lot of clients, right? It's not straightforward. A lot of times there's not enough money in that company to pay every single vendor, right? Very rarely, almost seems like. So it is a juggling act. Managing that cash flow, who to pay, when to pay, what to anticipate coming in. It's a process. There's no easy button there as well, I'll say. Budget forecast pro forma. So my advice to people is first, set realistic expectations, right? Use the historical data that you've then aggregated to set some of those expectations, because the information that you got in the past, right, will be somewhat indicative of what's going to happen in the future. But also to expect the unexpected, right? You never really know. You can always plan ahead. You can always budget ahead. You can always know what to expect, but not will always be the case. For budgeting, create short, mid, and long-term strategies, right? Look over the next 6 months, over the next 12 months. Put a budget together for the next 2 years where you want to be, maybe the next 5 years, right? As you think about getting out further and further, though, with those budgets, think about the accuracy will diminish, right? Next 5 years, pretty uncertain. Next 2 years, somewhat uncertain. But maybe the next 6 months or a year, you can get pretty close. And we've done some budget exercises with clients over the next 12 months, and we'll go through another big one next month for 2022. But what we put together for 2021 was pretty close. It was pretty accurate. And you can look back on it and say, okay, well, again, some unexpected expenses, some drops, some changes in revenue. But for the most part, if you go through the exercise and you know what to expect and you're using the information, you're anticipating growth, it'll be pretty close. Again, 5 years from now, though, things change a lot in 5 years. Set easy, medium, and difficult goals, right? Obtainable goals. Kind of your moon goal, right? Next year, if I can double or triple revenue, right? That'd be a great goal to have. At the same time, though, it's realistic. Make sure it's somewhat realistic. But at the same time, set the different level of goals to see what's obtainable, what's achievable. Review them regularly, right? When we set a budget, at the end of the month, when we close out the books, we look back at our budget and we say, okay, how close were we? Where were we off? Where were we favorable or unfavorable? Why were we favorable or unfavorable? Right? The data will tell you what happened, and it will allow you to make a change going forward. Sometimes it is as simple, unexpected items, right? But taking on, maybe you didn't expect to grow at your rate. Taking on 1 or 2 employees is a big change to a lot of small business owners. It's a big expense line item. Not just in wages, but also taxes, right? You got to think about the taxes that are associated with hiring that employee, the benefits that are associated with hiring that employee. So update and review regularly. It's always my piece of advice. I would say, tap key employees for feedback, right? I've found a lot of clients, again, you're kind of in that I would say, that C-suite of individuals, decision makers, right? There's 1 or 2 of them in there. And they're the only ones looking at that information. And I know financial information for small business owners or any business owner is, right, it's private. At the same time, I think if you can tap some of those key employees that typically are involved in the financials of the company, you kind of talk about some of those expense line items or some of those categories, I think some of the feedback or advice you get from them has been pretty surprising over the years. I've seen that. Different perspective, different ideas, right? A little different insight, something you're not necessarily looking at. And it'll allow you to kind of further the conversation. And I put there, Excel, love it or hate it, is your friend. I mean, you're not ever going to get away from Excel. I hate to say it. It's going to be useful for some information somewhere along the way. The good thing with some of those reports within QuickBooks as well, you can not only can view them within QuickBooks or download them as a PDF to present, but you can export them all to Excel, right? So say you've got a 12-month P&L on a monthly basis, you want to look at that information more detailed, you can export to Excel, and then kind of manipulate the data or maybe the organization of that data to see what needs to happen next. Budgeting, for instance, that's a big one. So instead of recreating a framework for a budget, you can export a P&L from a previous year, look at the balances, and say, maybe I'm going to see a little bit of growth here, maybe I'm going to see, I'm going to cut a couple expenses here, to then use that information as a framework moving forward. I think we talked about, product service mix appropriately, making sure you're kind of getting that underlying data appropriate. Like I said, sales and collections are 2 very different things, right? Job is not done until you've collected the revenue. Recognize static recurring expenses, right? So if you got something that's, rent, for instance, right? Say, well, I'm in a 3-year lease. It's not going to change, right? Pretty easy to predict. But also estimate, the dynamic non-recurring expenses. Try and anticipate what you think maybe your cost materials are going to be next year. Hopefully we'll see them come down. Using existing data to your advantage. Again, I don't like to think that, past data is exactly what's going to happen in the future, right? But it'll at least give you somehow a baseline. It's something, unless something changes significantly, right? That data should be, a base work, right? It should be a base for you. So use that data to your advantage to make decisions going forward. Okay, so we're getting close here. Any questions? Anything we want to go over? I mean, this is, again, so this is kind of the key takeaways, right? Start creating your database. Start aggregating the company information into a single location. Become an expert or lean on one, right? Find somebody who likes to do this. A lot of people don't like to do this one bit. There are a lot of people in my industry that's why we're in business. It's because there are a lot of people that don't like to do the financial work, which is perfectly fine. There's a lot of other things that I don't want to be doing. Create your goals and strategies. I think it's always important, right? Review your data regularly to make sure that you're looking and making changes. And then number 5, always, is the key goal here, trying to profit. Okay, that's it. That's all you got. Yes, sir.
Barrett, not related to anything other than, what's the significance of the bull
Bull.
on your logo?
Well, 3 things. Yeah.
Okay, fire away.
It recognizes my time in the equities market, the bull market,
Okay,
from Kansas City, stockyards.
okay.
And number 3 is, we're talking about it right now.
Bull.
You asked, yeah.
Number three is what?
He asked, so we're talking about it. So it's working. Yes, sir.
Detailed, I mean, you mentioned getting detailed, but I mean, I suppose you can get too detailed as well, right? Where you're spending more time detailing every little item that's coming out of your company versus a general, these are office supplies, right? Toilet paper, paper towels, cups, forks, blah, blah.
Right.
You know what I mean? I mean,
You can. I think that's why when we present information to an owner, right, we're presenting it to somewhat of a high level, right? It's our goal to kind of be in the weeds, to look at the individual detail, but then to present at a higher level. The information's there, then we can look at it in a little more detail, but you're absolutely right. You can get lost in the weeds very, very quickly and look at individual transactions. So it's the aggregation, in my opinion, that's kind of the more valuable piece.
Other questions?
What's the range of cost for QuickBooks Online?
I would say 40 to, I think it's like 130 per month. The advance has gotten kind of pricey. So most accountants as well, though, have an accountant's account, right? I've got an accountant's account and I can offer wholesale pricing at a discount to people that are underneath my umbrella. So whether you're a client or not, maybe you just want to hold your subscription through me. Other accountants will be able to do something similar as well to pass off that discount. Yes, sir.
If we ever move from QuickBooks Desktop to QuickBooks Online, would QuickBooks transfer that info for us,
Absolutely.
GL codes and everything?
Absolutely, yeah, so it takes, I mean, gosh, it's a tremendous amount. I don't know what the limits are, although, yeah, we've done several conversions, and it'll take several years worth of data, convert it all to online, and kind of let you run. Very, very little discrepancy or changes.
Is that an added cost?
Not from QuickBooks. I mean, if you're gonna pay someone to do it, it's, it's an added cost, kind of an onboarding cost, but it's free for anybody who has an account, yes.